Good morning. It's Saturday morning, the 11th of October, 2025. I'm going to take a look at the markets using HCSI, and I'm going to concentrate on the Market Insight ETFs. I put these ETFs in a folder several months ago because it gives me a quick reading on what happened both intraday and the prior day. Now, as always, the market is your teacher. We know that, and yesterday there was another lesson. Standard risk disclaimer. I'm just going to read these two lines. Any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. Yesterday, on Friday, I was up in Omaha visiting my oncologist. Always a fun thing to do. Anyway, I just happened to glance at my phone, and at the time the Nasdaq was up 40 or 50 points, I think, and about 10 minutes later, I looked at it and it was down 200 plus, and I couldn't figure out what was going on. So of course, I had to check the news, and then I found that Trump had responded to China's, I guess maybe limitations on exporting their precious metals and mining or rare earth minerals, had forced him, or he reacted by posting on True Social that he was going to up the tariffs on China, which we really don't need. But anyway, it was not a favorable market reaction, obviously. And as I drove home, I stopped at a rest area, and boy, the next thing I knew, the Nasdaq was down 600 points or so, and it just kind of kept going into the end of the day. And now the question is this the beginning of a major correction, or is it just a one-day blip? Or traders, investors willing to jump back in on Monday, or are we going to have a major sell-off next week? It's time for a major sell-off, but that doesn't mean anything. The risk tolerance seems to be really high until it isn't, and yesterday was one of those days where the risk tolerance was not high at all, because when the market, when they started dumping, it turned into a free fall. I'm going to drag a chart over here from Thinkorswim. This is a 78-minute chart, and you can see what happened here. The market was just moving along nicely, and then here is Trump's True Social post, and you can see that it dumped immediately over the next slightly over an hour, and it just kept going. By the time the day was over, the Nasdaq futures were down 1,101 points, or 4.35%. Now, does that mean it's going to continue to go? Not necessarily. So let's take a look here. I'm going to move over to the daily chart. Look at the volume spike on this. There's nothing. Let's see. Right here, as I look across here over the last 6 months, there's nothing that even comes close to it. Maybe right here and right here on this dump. This looked like it was going to be a major sell-off, but it didn't materialize. Buyers stepped right back in, and that can certainly happen again on Monday. Were two efforts to fall right here. We have an effort to fall here, but with this huge volume spike, that's a little more worrisome. Now, there's been a lot of talk about Bitcoin, rushing into Bitcoin. Here's what happened with Bitcoin on Friday, down 7,100 points. Take a look at the comp. You can see this huge candle. There's no volume on the comp, but word open, it traded up, and it closed near the low. It'll be interesting to see what happens on Monday morning. I've been around a long time. I'm 80 years old now. I've seen a lot of market meltdowns, so we'll see what happens here. If you look at the comp here for yesterday, well, let me go back one here. Here is a weekly chart, 2-year weekly, and you can see that it wiped out the last 2 weeks. But after this massive run up, you expect some pullback. Until the psychology, the positive psychology and greed is broken in this market, we'll see buyers step in thinking they're bargain hunting, but there really are no bargains in this market. So just be careful, know your risk before you put any trades on. Okay, I'll get this out of the way. And let's get into HCSI. Under my charts, I've been using this chart right here a lot. Context 3618 EMA's relative strength to industry. That's my 2B chart. Under my most used charts, I just added, what I did is replace the intraday information here with the end of day information on chart 2C. So when you do your update to the add-on, this chart is going to be under the most used chart under my name. So it's 2C. I really like this chart because it shows about everything you need to know for setups and to follow a trending stock or an ETF. Now where I am for this look at the market is I am in the market analysis user groups, the Market Insight ETFs. It's this gives me a good cross section of ETFs and so on to look at. And I'm sorted on raw combo, and you can see the Ultra VIX futures shot up yesterday. Price change one day, 19.1%. This is the actual price change. Here's a percentage price change, followed by the 20-year TLT bonds, followed by silver, gold, consumer staples. Obviously, a flight to quality. If you look over here to the right, you can see the percent volume to the 90-day moving average volume. Some big spikes, both up and down. And if I look down here at the bottom, heavy volume on the SOXX, which you would expect. It was actually down 6.3% yesterday. Now this is what I find useful about my warehouse view or spreadsheet, whatever you want to call it, is I can instantly see where there are crossovers, the days since the 3 crossed the 6, either up or down, or where the strength has been over a longer period. And if you look right here, you'll see that silver and gold have been up 36 days and 35 days during this run up. So that tell us that there has been a flight to perceived safety in both of these indexes over that time period? And you can see, looking at this chart, this is the end of day chart. Here's the volume yesterday on the gold spider. But where did this whole thing begin, this run? Well, this is why I like this chart. I'm going to put a crosshair on here. You can see the 3 crossed the 6 clear down here, and they were above the 18, and this ETF has not looked back. Here's the 3 crossing the 6. This was, let me bring an arrow up here. 3 crossed the 6. This was accompanied by a pocket pivot volume move. The VPOC 1010 had already been positive, and the force index turned positive at the same time. I'm going to move up to the silver, and pretty much the same picture right here. Here's the crossover here, and the pocket pivot volume move was the following day. The VPOC happened on the same day as the crossover, and then the force index 10-day also turned positive here, and the ETF took off. Also, we had a low volume test right here, and a confirmation of that test. Effort to rise, effort to rise, effort to rise, effort to rise, effort to rise. Little pullback here, but notice the 3-day EMA was well above the 6. And even though there have been a few shakeouts along the way, this continues to trend up. As I look down the list, here's another long-term S&P metals and mining spider. 35 days it's been positive. So bring it up. So here's the crossover with the pocket pivot volume, also the VPOC, and the 10-day force index turned positive on the same day that there was an effort to rise. High volume up bar closing on the high indicates strength. Effort to rise, bullish sign. Here's your test. Here's your confirmation of that test. Effort to rise, and so on. And here is a slight pullback. Here's a low volume test. If you look down here, you can see this is relatively low volume, and it continued to move up from there. You can see that the past 2 days have shown red candles, and we're getting some VPA flags up here. Negative VPA flags yesterday was an up thrust bar after an up move, a sure sign of weakness. So just this following week, see if this pulls back. But the move has been a strong move over multiple days. I'm going to go back to this, and I'm going to sort on the days down since the 3 crossed the 6. I'm going to sort, resort up. And these are the crossovers that happened yesterday. These are the crossovers that happened the prior day. And these are the crossovers that happened on Wednesday. Now I'm going to add another sort to this. Going to go in here and type in 90% volume to the 90-day moving average volume. And it resorted this column here according to the heaviest volume with this column over here, the percent volume to the 90-day. And you can see that on the SOXX, yesterday it traded nearly 300% compared to what it normally does. And that information is right here also in this daily chart. I also have the percent volume to the 20 and the 50 in addition to the 90. But you can see there's a huge candle down. And by resorting, I can see that this ETF, which crossed down, was the most active based upon a comparison to the 90-day moving average volume, followed by the technology sector, the XLK. So this is where the strength has been, and this is where the weakness was yesterday. If you look down here at the volume bar, the comparison, there's really no comparison. Make this to this volume level going clear back. Well, I don't see any comparison to it anywhere on this 6-month chart. Now looking at the chart, you can see that 3 crossed the 6 down, force index turned negative, VPOC turned negative. Here is the cross to the downside. We'll just have to see how brave people are, traders are on Monday, if they think this is a buying opportunity or if this is the beginning of something. There's no way to predict it, but psychologically, Friday was tough on a lot of people who just kept this thinking the market was going to go up endlessly. Okay, I'm good. Let's just take a look at the XLK. I think it's probably pretty similar. Now look at the volume here. There was a big volume right here. It didn't go down, but this volume spike was greater. Yesterday closed. Where did it close? Closed at 0.84% of its daily range, so it closed just right at the bottom of the daily range. I realize that the 3 crossing the 6 and above the 18 with these other indicators. There's hundreds of indicators out there, but these really are all you need, in my opinion, both for up and down. And then when you add VPA or VSA, whatever you want to call it, you really get a great insight into what's going on with an ETF or a stock. Now I want to look at a couple more things. Let's go down here to the bottom, the energy sector. It crossed down 9 days ago, days since the crossover, and the oil fund did too, and the volume was above average yesterday. So let's take a look at the energy sector. And here was the crossover to the downside right here. Very choppy in here. This is a looser chart than what I've been looking at. There's a lot of emotion in this chart, as you can see that. Compare that to, let's just go up here and look at these. So see how the candles just right up the 3 and the 6, and you don't see nearly as much emotion as I see in this energy stock. It's just kind of all over the place. Now, I have no clue what's going to happen on Monday. I would say if you're risk averse, just kind of stand aside and see what happens. There's no hurry to get into this, back into this market on the long side. We're coming into earnings season starting next week. The hype on the long side on the AI stocks has just been unbelievable. It's like it's never going to end. This is your chance to get in on the pot of gold. Well, we'll see. You have to control your risk. First of all, do a market analysis, and this really is a good place to start, the Market Insight ETFs. Okay, I'm going to end it there, and I may do some updates throughout the week. I'm feeling better, so that's good. But thanks for listening, and just download the add-on. You can delete the warehouse and chart files if you want to, but you probably shouldn't have to, because I haven't made any other major changes. Thank you for listening. Have a good week.